and let it create a function in your hand that will cause you to do something that's going to really help you to change your circumstances, so that 6%, it really means nothing to you. What's up, YouTube? I am Shanika Lawrence. Thank you guys so much for stopping by. If you are new to this channel, then welcome to my YouTube channel. Please like and subscribe to this channel. I have so much more in store for you. Listen, we talk about faith, family, marriage, love, relationships, lifestyle, all of that. So interest rates are up, but don't panic. Interest rates have just gone up to 6%. I really want to talk about this because not only am I in the process of purchasing for myself personally, but I'm also in the business of acquiring real estate properties and different things like that. And, I realize this does affect our business. It does affect, how we make decisions as it relates to being able to buy different things. And, a lot of times these things happen for the reasoning of fear, to make us fearful, to not want to move forward, to not want to, make the purchases, to not have, these appreciating assets in our portfolios for whatever reason. And so we just have to remember that it is only a contributing factor and not a determining factor. The difference is a contributing factor is something that is happening on the outside of you that you have no control of, versus a determining factor that is happening within you. If you make that mindset shift that you are still going to go forward, that you are still going to make a way, that there will be a way, then believe me that you can do it. And as a bonus today, I wanted to kind of give you a few ideas of something that you can do to kind of maneuver through the increases in interest rates. So, I know that people are like, why are they doing this? This isn't ethical. However, the whole entire point of the interest rate increase is to, kind of slow down the economy, because, back when COVID was really strong in 2020 and even last year in 21, interest rates were as low as 2.5%. They were so very low. And so at that point, people were just buying real estate. People were just buying and selling and refinancing and doing all those kinds of things. And it was driving, the economy in a different direction. On top of all the government spending and everything else that's happening, the things that are driving up inflation, this is just another way to slow the economy down, to slow all of this, buying down, so that we can just kind of get a hold on everything. Because, as everyone knows, the supply of homes is down, the supply of real estate has gone down, demand has gone up increasingly. And so, just to kind of offset that, this is why the interest rates are continuing to go up. Now, if anybody remembers, and I didn't really know this until, one of my lenders spoke to me about it, but pre-COVID, interest rates were actually about 8 to 10%. And so, actually a 6% interest rate still looks better than a 10% interest rate, which was, the case pre-COVID. Now, of course, we have the differences in the actual real estate price, the value and the pricing of the real estate. That does make a difference, basically speaking to the gap in the amount of income of the average American and the real estate pricing, which obviously has to change, which obviously, if we're going to see something different, then of course, there has to be some change. But again, I want you to think about this as a contributing factor and not a determining factor. This does not determine your ability, your power to be able to, again, continue to try and create wealth in your life, or to close that income gap that we are seeing. So instead of saying to yourself, I can't do that, I'm not going to be able to do that, you should start to ask the question, how can I do this? What is it going to take for me to be able to achieve that? How am I going to be able to establish this so that this happens? And take your mindset out of the limitations. We have always made up these limiting beliefs, but if you stick to your limitations, if you fight for your limitations, then I've heard the saying, if you fight for your limitations, then congratulations, you get to keep them. You get to keep the limitations that you are so fighting for. But, I believe, again, there is better. So we don't have to look at that 6% as something that's going to scare us, but instead we can look at it as something that we can work around and that can work in our favor. So as promised, I'm going to give you a few ways to maneuver or get through, or some things that you can do to kind of offset these interest rates, these high interest rates, and that you can still kind of be comfortable about moving forward in your home buying purchase. The first thing is refinancing. And, refinancing may not always be the the key or may not always be a good idea, but at some points in your loan, they may be. I think that refinancing could be a good option because it's still very early in your loan. You still have time to lower the payments, in your loan due to, your overall loan being lower. And then it's a possibility that the interest rates could go back down. I mean, I know they say that they won't, but hey, we weren't really expecting COVID. So we don't really know the kind of things that may drive the economy to push the interest rates back down. And if that happens, then we'll be, able to kind of have another advantage where we can refinance that home in the future. So if we can kind of stick it out for the first couple years, of that loan at the amount or the rate that the houses are appreciating now, you'll be able to do that much sooner, and it might be a little bit more helpful in your process. Also, your mortgage insurance will fall off if you decide to pay less than the 20% of a conventional loan. You still might have that mortgage insurance in the beginning. However, once that ratio difference happens, that's actually what I think that 80 to 20% idea was. But once that happens, then that mortgage insurance will actually fall off. And again, it will also lower your monthly payments. Another way that you can maneuver against this increase in your interest rates is, of course, like I said, to find ways to be more intentional about increasing your income. Whereas you could, get another job to exchange your time for money. I don't really recommend that if you're already doing that. What I recommend the most is to start a home-based business or some sort of business that could give you the revenue over time to be able to replace your income or to be able to supplement your income. And that way, you'll have the money to, pay your bills, right? Or to pay your mortgage. Statistically, most millionaires, I believe it's more than 80%, they are wealthy because they have started businesses. And so it's going to be, that entrepreneurial mindset that can really make a difference in the impact that you make, and you can make a difference in the level of income that you're able to generate. And then the last thing, actually you just heard this from someone, but could be an idea that you could use a HELOC or home equity line of credit to fund, different things, so that you might be able to pay off your house sooner. Now, some people pay off their houses by, paying more on their principal every month. And, again, we're already paying a lot for mortgages. So who trying to pay an extra $1,000? I mean, some people might, right? So I think the idea behind this was to use the HELOC to pay for your utility bills, because you have a lower interest rate on your HELOC and you have, a longer time to be able to pay it back. But then you can use your income that you're making from your job or from your business. You can use that income to actually pay extra on your monthly mortgage. You can also use that money from the HELOC to invest into cash flowing assets or income producing assets, which can also bring you income. And that's what you want. You want to shift the dynamic of your financial house. And again, it's going to help pay down that loan. And you could do this before you even refinance, so that if you do choose to refinance, again, you have a lower loan amount. It's so many different options. I believe that when it comes to finance, and this is why, I spoke about this in the last video. If you haven't seen it, then go check it out. This is why I spoke about, the importance of understanding financial literacy, because there are ways to get around, the 6% increase in the interest rates, even ways to get around the increase in the, value of homes. It's still real estate. It's still an appreciating asset. And that's what we want to be focusing on, ways to increase our assets and to lower our liabilities. So once we're able to do that, then we can make the moves that we need to make. But we shouldn't allow, again, that to be a determining factor and to cause us to fall into fear. And we're going to be fine. We're going to make it. And, we're going to be successful in all God has created us to be. Just be mindful that, this isn't it. This isn't the end. There is more. So just continue to strive and just continue to go after that house. Go get that house. Go look for that house. Go claim that house, and let it build up a feeling, and let it create a function in your hand that will cause you to do something that's going to really help you to change your circumstances, so that 6% it really means nothing to you. All right, so guys, I hope that you guys enjoyed that. I hope that y'all learned something from that. If you have any questions, then leave me a comment and let me know what you guys think. I realized that, you know, it's not as easy, you know, for everybody, that we're all going through things, we're all experiencing things. But hey, I'm not going to allow the contributing factors to be determining factors in my life. I'm determined to make a change. I pray that you would be determined to also make a change in your life also. So, all right, guys, y'all have a great evening. Thank you guys so much again, and I will see you guys very soon in the next video. Bye.